Okay, I think we can get started. We have Sawyer here as well. Welcome, Sawyer. So this is actually perfect that you're here because I'm going to go list out a list of news items that just happened in the last month that appear to me to be incredibly good news for Tesla, the company, the stock, the fundamentals. And now that it's the year end of 2023, as we look forward to 2024, just curious to see how people are looking at Tesla, the company. So, here's the most recent news. We got Giga Mexico permits are now approved. There was local media saying that Giga Shanghai is now moving forward with an expansion of a new factory. Both of them are geared towards the Gen 3 compact car. And then we even just got news this morning that the Giga Mexico may not only be for the Gen 3 car, it can also be for Cybertruck and energy and other products. We heard Elon say the Gen 3 production line plans are well advanced and that you're going to be blown away by the way that production is done. The China insured numbers came in yesterday and they're at record levels for the week. The macro is improving, and we've got word, or the thinking now is that there's going to be at least 3 rate cuts next year. The Tesla bot demo dropped, and we were all blown away by the progress, the dexterity, the fingers and the hands, its movement. Things improved. We're all still anxiously waiting for the FSD version 12, which is the first end-to-end neural network. But the demo, that was quite impressive. They started hiring for Dojo. It looks like one of the hiring advertisements for that, they're talking about Dojo as a service. They're advertising now for advertising. That just came out this morning. There really isn't any competition at this point. So many of the legacy automakers have come out and said that they are delaying their plans for EVs. Volkswagen just joined the North American charging network standard today. And of course, we know that that was about to happen anyways. The Cybertruck is amazing, and we've seen so many drops of fantastic videos, and we're learning they new features and new capabilities. But this is a monster truck. It's amazing. It seems to be just amazing. There was a deal done with Uber. This is a small deal, but they're trying to sell more Teslas to Uber drivers. And there was a deal done with Best Western for implementing charging stations across the hotels. I'm sure there's many more. Why don't we start with you, Sawyer? Is there any news that you've broken that I have not mentioned the last month? Potentially good news or bad news for Tesla?
Not for Tesla. I'll just mention one thing we're seeing right now. GM, there is a 3-alarm fire right now, actually, at General Motors factory in Detroit, which makes a lot of EVs. For those who don't know, a 3-alarm fire just means like triple the amount of firefighters and trucks and equipment go to the scene. And anytime it's past a 2-alarm, it's typically a really big fire. So hopefully it's not too bad. But no, I think you listed pretty much everything. And we'll see what the news is into the end of the year. Typically, Tesla likes to do end of the year extra incentives in the last week and a half. So I'm curious to see if they'll do those or if they'll just stick with what they got already.
So let's go through the panel here. What do you guys think? I mean, it's just on that small list of the last month, there must be so many things that are happening that are positive for Tesla. Is there, share with me what you're thinking about the negatives that might be happening and how should we be looking at Tesla's progress? Do you want to start, Alexandra?
Oh, thank you for the ball. What are the negatives? Well, the first one is how quickly can they ramp Dojo and how quickly will that come to the level that others can purchase services on it. You mentioned that phrase on their AI and Dojo page that they put into the recruitment section of Tesla. And I think it's very clear that they want to make sure that Dojo is something that people can purchase space on it, use it for their learning software, whatever it's going to be. So so that part, I think, it's not that it's negative, but it's questionable how quick it goes. We've seen people leave Tesla. We've heard rumors, I don't know how confirmed they were, with Elon not being happy with the current state of where it is. So that could be a delay factor. The other one is how quickly will Mexico now be built. Remember when we initially heard about Mexico? I mean, it must be a year ago already. It was supposed to be from groundbreaking to finish 6 months. I just don't believe that anymore. We're not at groundbreaking yet, but the good thing is the Mexican state is putting, and the county is putting the money where they promised. So the whole infrastructure around it has now been put out, and they're receiving quotes, and whoever wants to participate in those road buildings and off ramps and whatever else it is has to deliver between end of January and the year after. I think it's end of March. So it all becomes a reality. It's just a question on speed. So my two, again, I wouldn't call them negatives, but less sure than others are how far. Oh, there's a third one, but the first two ones are how far are we with Dojo. Second one is groundbreaking for Mexico, and how long will that take? And the third one is I'd really love to have an update on 4680. I mean, we've seen how capable the Cybertruck has been, and how much new technology is in there. But I just feel a little bit hungry of really understanding where we are with the ramp of the 4680, how efficient they are. Is that the final solution, or are we going to go with multiple formats of those batteries? So that's the other one. But thank you, Herbert, for letting me start with something negative.
Well, I was going to start with Christian. We know he's our guy that we go to for Bear. So go ahead, and Christian. Let's start off with you talking about that you are not yet so bullish again on Tesla. Tell us why, but then switch over to the economy. You are going to be, you can't help yourself, right? You're going to be more bullish about the macro, aren't you?
Yeah, good to be back. I love what Alexandra said. No, I'm bullish. What I would say is, overall, I'll just say my overall arching. It's been a while since I've been on the space. So Tesla, a couple times this year, made runs for 300, right, after that terrible last year in 22. But it's come back down, right? So it's built a nice base in here, right? So the only thing I would say is now that the Fed's on the other side, right, the next thing is probably a rate cut. And even if that takes March or even summer, whatever, we know that's probably the next move. So the Fed's getting easy. We see the 10-year coming down, meaning that's all favorable to Tesla in many ways from a stock perspective, because interest rates are lower. It makes their cash values in the future discounted back worth more. And it also, because of they're in the car business, it just makes interest rates lower so people could buy the car, and it costs not as much because the interest rate on the loan will be a little lower as the 10-year comes in a little bit. So there's a duality for Tesla there. What I would say for the negative is, and it's not really a negative, but for me, it's always on the back of my mind, valuation, right? Tesla always is going to be highly valued. It's always going to be a high PE. But they have to find a way next year to get the earnings to grow. So I love Tesla bot. I think that is, and I said this before, that AI, just seeing that bot, if they do a presentation on X where it shows the bot doing things, that is in the minds of investors, right? They want to be a part of that. So even though bot may be a couple of years out, 2-3 years out before we see any significant revenue, it still could be working in the factory. So something like that, Elon's a master at, right? FSD, getting you to buy into the new imagination of the investor, what could be in the next 3, 5, 10 years. So that, I think, has a floor with the AI. So I think that's in Tesla's benefit also. So the main thing for me with Tesla is the earnings. And I know they're not focused on the earnings in the short term as much as the long term. I get that. But if you have all these other companies growing their earnings and Tesla's earnings aren't growing or they're flat, it's hard to maintain a high PE, because what happens is if the stock keeps going higher and your earnings are staying flat, the multiple, the PE, the multiple gets really, 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 really big. And sometimes that scares off institutions or even retail investors because the earnings power isn't flowing through. And when Tesla had that huge run, they did have earnings power. They went from losing, hundreds of millions of dollars a quarter to making, tremendous amounts of money, tremendous amounts of free cash flow. And you saw the explosion of the stock. So I think we do need a little bit of earnings power next year. And I think we'll get some of it. But if you ask me, the main concern is how much can they grow units next year, and how does that affect the operating margins translating into earnings per share?
Okay, well, it's perfect lead up for Jeff then, because you didn't answer the question. The macro, right? That's the number one driver for Tesla's earnings, Tesla's sales, and then you've got the supply chain improving over the next year.
I did answer the macro. I said interest rates with the Fed.
How many interest rates? And they'll probably even do more than we're all expecting. So Jeff, why don't you educate us on what you expect to happen next year?
Yeah, no, that was good input from everyone. What I'm actually really bullish on, and from being in a capital investment position before, is seeing the capital investment that Tesla is doing. They're restarting the factory. Like it looks like they're kicking Nevada off. They have to be. I mean, they promised the the semi in 24. There's no line to build that unless they build a Nevada line. And we've heard what's going on in Mexico. And then they're going to have to be adding these shifts in Austin for Cybertruck. And then you look at Alexander's done a great job of posting all of these different types of headcount that Tesla's hiring across the board. That is a sign. Like when you're hiring athletic trainers and people doing creative, that's a sign that you are, and they're hiring all these hardcore positions for bot and for production and for supply. The VP of supply chain posted today that he's posting a bunch of recs for hiring. When somebody, so that's an Elon decision. That's a decision coming from the CEO that says, all right, I am now comfortable investing and hiring people, because he is extremely prudent. We've seen him be extremely prudent and cutting, doing early headcount reductions. He was the first to do, the headcount reductions back in June of 2022. And now it looks like it looks like they're opening the spigot. And from my perspective, that means that they're bullish on the future. And now what they say on the earnings call and how they guide, it could be one thing or another, but you have to look at a company's actions. And if you look at what they're doing on headcount, and if you look at what they're doing on capital, they're actually fairly bullish. They're expanding their product line, they're expanding the size of their factories, and now they're expanding their indirect labor headcount. And to me, that's very, very. They see a very bright, bullish future. Of course, there's risk ahead. Of course, there's still probability of dipping into some sort of minor recession. Who knows? I'm gonna be interested to see what the auto SAR in the U.S. is next year. It looks like parts of Europe are in a recession. China still is not fully recovered, but EV growth, like we've been talking about for over a year, EV growth is still like powering through this. And no matter what the media narrative is, if you look back at the history of EV growth, like we've had 70-75% growth, and all of a sudden it dips to 40-45%, and people are lighting their quarter on quarter, and like people light their hair on fire and say, well, EVs are slowing down. But if you look at the history of that, that's happened before, and then it picks right back up. It doesn't mean it's going to grow at 750 or 70 indefinitely, but it's going to be on a fairly steep growth trajectory where it's going to be meaningful growth year on year. And that's what Tesla needs, because that's all they need, is because they're in that pole position from a tech perspective, from a supply chain perspective. They've locked up the long-term deals. They've installed a long-term capacity. Remember, GM, VW, Ford, Porsche, all these companies, they're kind of on their back foot right now. When you pause like that, like what they're doing with capital investment, remember, they're pausing on infrastructure for charging. They're pausing on investments for EV in their factories and capacity adds. And when you do that, you're canceling stuff with your suppliers. You're putting them, some suppliers are probably going out of business as a result. I mean, you're leaving a very bad taste in the mouth. And what happens in the real world is you don't naturally just turn that back on. And I've been in this position before. And when you go back to your supply base and say, okay, I'm ready to ramp now. Let's say it's 2026. I've got this great whiz-bang product. I'm ready to ramp. You're going to put your demand signal in, and they're going to second guess you. And all of a sudden you're going to hear like quote unquote supply issues when they really don't have a very trusted supply base and capital base that they can work with. Tesla, on the other hand, extremely trusted, just growth. I put a tweet out within the last week, just the model growth that they have year on year, everybody wants to work with them. Everybody wants to work with them. So, not to say everything's rosy. If you were to ask me what the risks are, I agree. Like the 4680, both really performance. Like it's not at the energy density we wanted at yet. It's barely better than the current Panasonic cells. It's like neck and neck. So you have the performance issue, and you have the supply issue that they're still working through. So I would say that that's a fairly big risk. Is the Cybertruck? I know we've seen a lot of videos. I've commented on a lot of videos, but we actually haven't pieced together where that whole ramp is at. Yeah, we're seeing some encouraging signs, but we really need to see a couple of quarters of production to see if this thing is above or below expectations. And then finally, kind of macro is what happened over the last year where we had a 16 million units in the U.S. Was that just pent up demand because those automakers couldn't supply cars the last few years? And are we going to have a little bit of a dip in auto purchases? I still think EVs are going to be in a pretty good spot, but those are the risks I'll call out.
Right. So the question I want to ask you guys okay, most of us would agree that the macro is probably the most important catalyst or the most important influencer to Tesla, who's still being seen today as a car company. And so if macro improves, interest rates are cut, why do people still believe that earnings is going to be flat next year? Anybody want to answer that?
Well, I think I could go. Herbert, I think what it is, the reason it matters is because even though the macro is improving, we don't know exactly when the Fed will go, right? Like when everybody was saying the Fed was going to cut last year, I was saying, no, they're not. They're not cutting this year. The economy was too strong, and they didn't. Now it looks like they're going to cut next year, but the market's pricing in like 5 or 6 cuts. But the Fed said they might do 3 cuts. So you have to understand that the Fed doesn't really know what they're doing. And to steal a line from Jeff, the Fed's going to wait to the hour, to the minute, to the second before they need to make this decision. So even though Powell sound dovish, you've had some Fed speakers come out and sound a little hawkish. So all I'm saying is I agree. Inflation's coming down. The interest rates will go down, but we just don't know how fast and how many. So in that environment, we'll see on the call. And the reason I said it was a positive is because Elon on every conference call talks about the high interest rates. Now that the Fed is backing down and looks like interest rates will at some point next year be lower, that gives Elon no more reason to get on conference calls talking about how hard the interest rate environment is, because it's going to be easing is what I'm saying. So that should be less of an impact from him. And he should maybe take more of a bullish tone in that regard. So I agree with you. The macro will help, but it still has to come through on the earnings. How many units can they grow? And what's going to be the margins on those? Cybertruck's probably going to hurt a little bit. Again, I'm bullish. We're just having a conversation. We need to be real about things and not just live in an imaginary land. Cybertruck's going to be great. It's going to be great for the brand, but it might be a drag on margins next year. So they have to work through that. I'm very bullish overall in the market. I think Tesla's going to do great, but again, valuation comes at some point. The valuation is getting up towards 100 again. If we keep going up towards 300, earnings has to come through next year, unless the bot is so great and things of that nature are coming out where the market ignores the fundamentals of earnings and all that. It just says, you know what? Tesla's got that bot. In 2 years, they're going to be selling it and they're going to be making lots of money. And then the stock just rockets because everybody just sees the future. That is possible. So I don't know. I hope that helps.
Yeah, I think it's not just possible. It's going to happen. So if anybody in the panel disagrees with this, there is the Tesla bot. There is FSD version 12. There is Dojo as a service. Any of these 3, if not even more, can come out and redefine Tesla as an AI company. And it might happen in 2024. What does others think about that?
I think there's a lot of exciting businesses, but I think they're also in their very, very early stages. So they won't be super material to Tesla for quite a long time. And I think it'd be good for people to temper expectations. In terms of going into 2024, there's sort of a lot of variables, either with the Cybertruck production. We don't really know when the Highland, the Refresh 3 is going to come into the US. We assume January, February, Q1. And then, of course, we have potentially like a refreshed Y. There's rumored to come maybe in like Q3, Q4 of next year. So Tesla's going to have to shut down, retool for those. And then we heard Lars yesterday say they're going to start volume production on the Semi in 2024, which is surprising to me because they haven't really started expanding Giga Nevada yet, which which we thought they would, because I think they announced this in like January, February of earlier this year. So I don't know how they're going to do that so quickly, but there's so many variables next year. It's going to be really interesting to see what Tesla guides for 2024 deliveries. I feel like they're going to be really vague, just like something like we expect to deliver over 2 million, and maybe Wall Street won't like that, but I don't know. I think they're going to be vague about it.
And another number I'm really looking at, I'm actually looking at three numbers. One is free cash flow, but the most important is whether they alter the capex guidance that's currently between 7 and 9%. 7 and 9 billion, and I do believe that's not going to be enough, because remember, we're supposed to hear from India in January, and then they're not going to wait 12 months to start India. So we will have Nevada building, we will have an expansion in Berlin, we'll have an expansion in Shanghai, we'll have Mexico building, and then I just, and then with Dojo at the same time, I just want to see the number they're going to throw into capex prediction for next year.
Yeah, I agree with that. I don't, to add to that point, I don't think earnings are going to be very good next year. I want to see unit growth, revenue growth, but they're going to, basically the story is they're going to take their earnings and they're going to invest it. They're going to be building out factories. They're going to be building out data center, and they're going to be getting this bot program to this next stage. And when you're expanding product lines, you're expanding that's R&D, that's money. When you're expanding data infrastructure, that's R&D that eventually converts to production capex. And then you have all this factory capex they're buying. So basically, this is a story of, for this period where they ramped up their earnings, they had the two factories running, and they got Shanghai running like a top. They had Fremont maxed out, and then they just started building, Austin and Berlin. And then there was this honeymoon, right? And then they were able to raise prices because of all the supply issues. Then those two factories came on. They literally lopped about $5,000 a car of COGS across the board, added $5,000 of COGS per 3 and Y across the board. And I think we're going to be in this situation of kind of getting hit from either direction. Now, it doesn't mean that they're not going to improve gross margins. It doesn't mean that they're not going to have the ability to now maybe stabilize MSRPs at some point. But I think the story is going to be like taking all of this cash and basically reinvesting it. I think it's a different company now. And with all these different businesses that they have to fund and ramp and grow, you're not going to get this major operating earnings story out of Tesla. They're going to be doing a lot of reinvestment.
I'm curious to get your guys' thoughts on this Bloomberg report that just came out about 15 minutes ago. They're saying Tesla managers told some salaried employees the company is not offering merit-based equity awards this year, and that even some high performers did not get any merit-based grants. It's interesting.
How much could we trust that? You know how many times a Bloomberg report comes out and Elon says not true.
They have a history of being right and wrong. That's true.
Yeah, I don't know. I mean, it could. Oh, go ahead, Jeff.
I was just going to say, normally you don't have the spigot open hiring everybody, hiring athletic trainers, and then not doing equity awards. So those two don't normally mix. You either cut all hiring and you cut equity awards, or you don't normally just have the hiring going and then you're like, oh, I'm going to start cutting in the people's compensation. Those two don't normally mix.
Yeah, and to that point, I mean, who knows if it's true or not, but I saw a report or a tweet, 10% higher pay at maybe the battery factory in Nevada, possibly, worried about Fremont and the union coming in. So maybe trying to head that off by increasing. So maybe Tesla's strategy is to offer better salaries or hourly rates in lieu of maybe stock grants. I don't know, just a theory.
Yeah, that could be it. I mean, the report does say employees still got cost of living increases and salary bumps, so they might just be switching to larger salaries.
Okay, so let me be clear about my position, right? I know that earnings are going to be flat. I know that we don't want to be getting ahead of ourselves and expecting all of these ideas that generate new revenue. But 2024 is going to be a much different animal than 2022 or 23, right? You got the macro turning, and if it does, interest rates fall, but more importantly, it becomes risk on. Money has been sitting on the sidelines, and from every kind of economist I've been reading up and trying to understand how much this is, it's a lot of money, enough to move. And where are they going to put the money? They're going to invest in growth stocks that are story stocks. So this is where it flips back into, everybody's so worried about the earnings and what it's going to be next year and what's the PE ratio against that. Now it becomes, okay, which of the ones that are well positioned in the market and that have real growth stocks, growth stories like Tesla Bot, like FSD, like Dojo. And then the other thing I just keep trying to understand is, when does Tesla be rewarded as an AI company? Yes, NVIDIA just skyrocketed last year. And yes, they deserve it because it's actually real dollars, real sales flowing into their bottom line. But not every AI company has got their reward because they actually have real sales. It really is about the bet of the future and realizing that this company is going to just take over the world. And so at some point, people will start betting for the future without requiring Tesla to prove that they've got cash in hand at this point.
Yeah, they're all good points, Herbert, and that is the bullish take into next year. There's about 6 trillion in money markets that went in there at the high rates. You can get 5%. Just sitting in cash. And so you're absolutely right. But what I would say is we had some underperforming sectors. So the Mag 7 has dominated this year. But now we see, the Russell 2000, the IWM is the ETF there, starting to get some traction. We see some other sectors coming in. So I hope next year there's actually a little bit more of a broader rally because I think it's healthier than just 7 or 10 stocks, markets caps exploding and everybody else kind of just sitting there. So it might be evenly distributed next year. We don't know. Every year's kind of happenstance, right? What'll happen. I do agree with you. I do think a lot of people missed this year's rally. They were very bearish coming into the year. The media pundits were very bearish, and we've had a spectacular year. And usually a really good year does follow. Another good year usually does follow, right? The market usually does go up. So especially, the NASDAQ. So, I mean, there could be another good year. But what I would say is, I know you're a big on the story stock and all that, but at some point, you have to deliver. So Tesla ran up a lot this year on the story, right? Earnings really hasn't done. So the fundamentals of Tesla weren't that great this year, but the stock performed great. Next year, it might not work like that, right? If Tesla doesn't come through at least on improving the margins and maybe none of those, like Sawyer said, maybe those other things that we love doesn't really hit yet, investors might, punish Tesla a little bit. Again, I'm not making a prediction. I'm just saying these things do matter because people do value stocks, not just retail investors. Institutions kind of run the show. And if they think that NVIDIA trading at 25 times earnings and they're just putting up record numbers every quarter, they might go there or another company, then maybe pour money into Tesla, whose earnings are flat. And yes, maybe they have a great story, but it's just not yet. So they might not deploy as much capital. So I just think you need to keep that in the back of your head when you think about stock performance. Eventually, these earnings has to come through. It just can't be if this happens and if that happens and when this happens. That just doesn't work after year after year after year.
Herbert's point regarding risk on, Christian, I think are you arguing that if macro turns bullish, that the Tesla has performed fantastically in 23, when really, forward PEs that Wall Street is giving Tesla is not encompassing any of the potential revenue producers, or earnings that may happen. Like, is energy factored in? it just like I think about getting out of the stock, at least a portion of the portfolio, and playing somewhere else. But for me, the risk of that switch in narrative and sentiment happening, where Tesla isn't called a car company and we only look at earnings of cars, and you look at Carrie Blacks and everyone else that's valuing the company, even when they're doing their discounted cash flows from 2030, they're light on the numbers. If Gen 3 comes out, if Robotaxi connects, if Dojo, actually materializes, and I'm not like delusional about Dojo. I think they're going to require at least two more versions of Dojo before they just eliminate the need for NVIDIA, and they're able to deliver on FSD and Robotaxi. So I agree we should be cautious, but I think that is completely priced in, and I just don't think that we're going to have this super negative. I need to be a bear anymore when the Fed is actually appears to have landed this plane relatively softly.
Yeah, no, and I respect that. And the main thing that Tesla has for it as a stock, it's beloved. People want to own Tesla. People believe in Tesla. They believe in Elon Musk. They believe, and it's been a great stock. All I'm saying is at some point, when you say, you did one of those if things that some people, there's a lot of ifs there. And, there's a lot of other companies that have ifs too. So we think of it just with Tesla, if this, if like they're the only thing in the universe. There are other companies doing great things in the world. Now, Tesla is beloved because a lot of people love the sustainability and they have cool products where other companies really don't. So that is exciting to own Tesla. The only thing I'm saying is if the earnings stay flat, Tesla's trading at 70, 80 times. That means they're trading 70, 80 times forward. Do you want to pay 70, 80 times forward going out 12 months for that company? Or do you want a company that you could get 25 times forward, like in NVIDIA, and they're going to grow earnings again, maybe, grow earnings 50, 60, another 100%, where 25 becomes, 12. Like, money will go to the place where it's treated best. And if certain companies are putting up major numbers, you're going to get outperformance. So I believe bullish and the market's bullish, Tesla will do well. It'll go up. But I look at things a little differently from other people. I look at what could I get the best bang for my buck. So if there's a company or a stock or an ETF or whatever that I think could outperform another one, I want my money there. So if Tesla goes up nicely next year, 30, 40, 50% or more, but I think this other company here is going to like triple earnings and they might go up 4 or 5 or 6x, I might want to park money there. So it's about outperforming rather than just owning and it went up, so I feel good.
One thing I'll add is maybe this is too far reaching, but we might reach a point next year where so many people just become numb and we're used to Elon's political thoughts and controversies that not as many people care. Maybe that could help the stock. I don't know. That's probably, maybe it's a little ridiculous, but I find myself just being like,
In an election year, Sawyer. I mean, I don't want to interrupt you, but can you imagine in an election year that happening?
yeah. So I did say yesterday in a room, like we should all expect like next year to be absolutely crazy with the 2024 election. Elon, of course, is going to voice his opinions. He'll get more and more comfortable on X. Like, yeah, it's going to be wild for sure. But who knows? I'm certainly becoming more numb to it. But
So is there not an
wait.
Elon effect? Go ahead, Alexandra.
I wanted to come back because I was a little bit late in reading, and then I now published the Bloomberg article. Let's just pretend for a moment this is correct, and they're not doing the merit-based stock allocations to all employees. I think where this will hurt the most is actually in the AI department. The AI people have currently, and we've seen 2 people leave, right? 2 key people leave. They have currently job offers left and right. and especially Tesla employees, because nobody else has been so advanced in vision. So I really hope this is not general for everybody, because these people, I mean, we're going to see an AI Day 3, which is a recruitment event again. But if in the meantime this turns a bit sour, that people feel they're underpaid and don't get the options they'd hoped for, I'm not sure I like this. Oh my, I made you all shut up. Larry, say something encouraging.
I was thinking of what you said, Alexander. So we still think that people join Tesla for stock options, or are they joining because of mission and a steady paycheck?
I mean, in the AI field, they probably see a mission everywhere, whether they go to OpenAI or where, I mean, I don't know whether they see it at Meta, but I think if you are one of those hotshots in the AI field, you're probably not coming to Tesla for the electric car. But you are getting at the moment offers that are, incredible, because there are lots of people throwing a lot of money at this field. So I'm not sure if it proves right what Danahal says, and Herbert is completely right to point out that that's not always the case. I'm not blaming Dana in person, but I mean, the press is just distorting and sensational about anything Tesla. But if that proves to be right, I'm not sure that was really a clever move. And then I just wonder why, because Tesla is not running so thin that they can't give stock options, especially stock options that doesn't cost. That's not where the immediate loss is. So I wouldn't understand this.
Sometimes
That's a good point. Oh, go ahead, Jeff. Go ahead.
I'm sorry. I just read the article. First off, they talked to 4 employees. I'm saying that to talk to everybody, but sometimes what companies do is there's leveling that's required for options, or sometimes they shift. Like if you've been there less than 4 years, you're probably still on your original hire in, the grant you were given to hire in, and then they'll start doing refreshers if you're off your 4-year original hire grant. And it looks like I read the article, they are still doing that. So they may have shifted something, not this quarter, but it may have happened in a prior quarter or year, where it's basically like, you're an employee. When we hire you, we're going to give you your 4-year, your 4-year stock sign on. And then after that 4 years, based on your performance, we'll refresh it. But we're not going to hire you on for 4 years and then in year 1 give you a merit-based stock increase. So that's not totally uncommon, like what they're doing. So we really need to someone needs to piece apart here and understand what's doing, because there could be a couple of moving parts. They could have increased hire on, to get some of these AI people, they've got to do some massive sign-ons, both probably from a cash and from a stock perspective. So this may be more of a shift to the hire on equity grant, and then they refresh out, that 4 years expires, versus just everybody getting stock every single year. They may have just done a shift to get it, a higher amount up front to get the good people. So we need to hear the whole story from somebody, in Tesla HR, somebody that can actually speak to what's actually happening.
Yeah, I would put zero confidence in anything Bloomberg writes in the story. I would go to the source. This is Larry. I just want to address this conversation that I heard between Christian and Xander. Look, guys, if you see, the possibility of Tesla marking time next year, and you feel that, there are other better opportunities, and let's take that opportunity. This is not investing. This is playing Russian roulette with your money. You can't time these things. Yeah, it may well be that Tesla drifts for next year for part of the year or even all of the year. But something can happen. You can be precipitated into an entirely different world at Tesla overnight. And if you're investing in Tesla, you're really investing for the future, and that future will occur at a time and place that is not predictable to you. So yeah, if you want, look, if you're a gambler or if you're a whatever they call the fancy buying and selling of stock today, whatever the term is, that's fine. That's a different business. But if you're investing, you best put the amount of money in that you feel appropriate for that investment and that risk, and let it be there until the time arrives that that company no longer fulfills, until you believe that company no longer fulfills its potential. So I would, I just posted this earlier today. I would point out that we are facing a potential for the Cybertruck to become an absolute runaway blowout. I mean, I cannot begin to stress the potential for this truck. We see millions, literally millions, 3 million between GM and Ford trucks sold a year, that I think that the Cybertruck is going to eat their lunch. I think the F-150 is in real serious trouble. This truck has all the hallmark of an all-time blowout, success. Now, in looking at the Sandy Munro videos of his trip around the steel forming, the steel forming plant, I got a very clear indication that it looks to me like they have about currently 250,000 trucks a year capacity. But it looks to me like they could expand to that 500,000 with very limited investment and very rapid investment, actually. So I think that we're going to see an incredible year next year, where the Cybertruck starts slowly, but by mid-year or by the second half, early in the second half of the year, it's clear we're going to exceed that 100,000 trucks, and that we're on track for 250,000 trucks the following year. If that happens, that's a big number, and that's going to change the positioning of the stock. That's just one item. That's just one element I'm talking about. I'm not talking about the other elements. So, everybody's talking about, the macro and the change in perception and blah, blah, blah. But this stock has got a mind of its own, and you either believe that it's going to happen or you don't. Anyway, that's my view.
Larry, I have a follow-up for you. I loved your points, and I agree with that the Cybertruck has a lot of potential. The thing I worry about, and tell me if I'm off base, is that Tesla can make an announcement, and in one day, overnight, like we're taught in index investing that like 5 days out of the years where all the gains are made, or whatever the actual number is, that there could be like a 25% up day, even in an $800 billion company. Is that off base? Is that in line with what you were just saying?
Oh, it's absolutely in line. We've seen it happen in Tesla before. I mean, there's no doubt that, we know that Tesla consists of potentially 5 major lines of business, approximately. Any of those 5 could be a overnight catalyst due to one or other announcement. Any one of those 5, or even one that we're not even looking at. I mean, that's the reason to invest in Tesla, because you believe that, this first principles thinking, this idea about, you know, this whole methodology, this approach that Elon has actually works and is actually going to precipitate, you know, these 5 or 6 different businesses to become massive businesses. But they're not going to happen, you know, little bit by little bit. It's not going to be a progression that marches to some spreadsheet logic. It's going to be exactly as it's been in the past. It's going to be sudden, violent, almost unprecedented, and unforeseen moments. And, you know, we're going to hear all kinds of negative stuff and all the things that are going wrong. And, you know, and Elon's going to, you know, do his silly thing, these stupid things. Yeah, all of that's going to happen. But those violent events, those unforeseen, precipitous events are going to happen, and they're going to happen without, you know, without announcement. And it's not going to be this event or that event. It's not going to be, you know, Investor Day, or it's not going to be, you know, I don't know, Battery Day or AI Day. Those days generally result in the public being so confused that they mark the stock down. It's going to be an actual piece of business, as it's been before, like the Hertz announcement, like the supercharging announcement. But, you know, I think a very precipitating event next year is going to be the Cybertruck. When I think about the simplicity of the build of that truck and how they've conquered, you know, what appears to be inconquerable problems of trying to build with a completely new material, and how inexpensive it's going to be for them to scale up, how easy it is for them to scale up. I mean, it's quite remarkable. Just remember one thing: the long pole in a tent of any car line, any car production line, is the paint shop. There is no paint shop for this thing. And once they've actually got the methodology of stamping that or forming that steel, man, they can just scale that almost infinitely without a paint shop. It's incredible.
Yeah, I love your commentary, Larry, and I appreciate everything you said. The only thing I would say is I agree with you. And you know, anything could happen, and something could come out and push the stock up. But what I'm saying is there has to be an earning follow through, right? There has to be, if the breakthrough happens, you have to easily identify it, and then you have to model it out and to generate some earnings. Like, so when you're talking about the Cybertruck, I think the Cybertruck could be a factor next year. But the way I look at it is, if they do 2 point something million, Cybertruck is going to be less than, you know, 5% of the units, right? And we know the ramp is going to be a money loser, definitely in the first or 2 years. And Elon even said that. So I don't know. The market knows Cybertruck's coming. It's been coming. I don't know how Cybertruck is the catalyst for the stock. I think there's a lot of other catalysts for the stock, but I think Cybertruck is almost an afterthought now, because even though it's a great product, I think it's going to be limited in the impact. I know they sell a lot of trucks around the world, but mainly it's going to be in the US, and it's a polarizing product. So, like, even on a great year, if they sell 500,000 of them, is that really going to dent a 800 billion market cap? Or if the stock goes up $1 trillion market cap, if the bottom line, something like that, is directly down into earnings, right? Cybertruck is not an imaginative thing. Oh, what can this be, 20 years from now? It's a here and now. It's an easily understandable earnings machine, right? How much can you sell it for? What are the margins? Here's the bottom line. And I don't think it's significant enough to really push Tesla in any meaningful way.
Well,
okay, sorry, Larry, I know we want to continue the conversation. Cybertruck, Jeff wants to converse as well. Did you want to answer this first?
Not really. I mean, Christian is right, and that's not how stock valuations work. There are precipitating events where the market realizes the future potential, and that changes the number. This is not a stock that's based upon next month's earnings and next quarter's earnings and the following quarter's earnings. This is a stock that is a story, and right now it's not earning anything like its stock price is based on. Its stock price is not based on its earnings, and I disagree with you that they look at the Cybertruck potential of 1 million trucks. They'll realize the Cybertruck potential of 1 million trucks, and they'll say, well, when it earns that money, we'll worry about it. Anyway, but I mean, we can just take it, accept that we have a difference of opinion.
And let me just say, Larry, we're just having a nice conversation. But I saw you on Warren's interview. I loved you because you're a realist. You're a bull, and I get it, but you're also a realist, right? With the if I saw some of your I love your stuff. So I'm not being negative towards you. I'm just giving a back and forth. So I love you, Larry.
Everything you're saying makes a whole lot of sense, and it's definitely how Wall Street will see it. And a Wall Street analyst will look at those earnings and will try and derive something from those earnings. What I'm telling you though is that the price of the stock may precipitate in advance of that analysis.
I want to support what Larry's saying here. I did an interview with James of Invest Answers, and he presented a table of the best and worst months historically for Tesla stock, right? And the worst months for Tesla stock, this is the history of Tesla. There were 6 months where it fell dramatically in that month, 20%, 22%, 25%, 37%, December 2022, 37.5% drop in the stock. But at the same time, if you look at the increase, the best months ever, there was 8 of them. And they range from 43%, 46, 53, 61, and the best month was 74% increase. That was May 2013. But even as recent as January 2023, that was when we saw the 46% jump. Of course, this is a percentage. You can't, take that with a grain of salt. I get this, but this kind of just speaks to the fact that there are months when the stock will make dramatic, just crazy moves, both down and up. But if you see the numbers here, the up, it's like almost doubles when you see the downturns. Jeff, did you want to speak on the Cybertruck?
Yeah, just quickly. I was just curious, Larry. Like, how did you come to that capacity conclusion? Because I mean, I went through the video and I did a video with Herbert on it, and there's definitely certain things you can glean from the video in terms of when they were talking about some of the click rates of each of the stations. But we don't know the yield.
Yeah,
we don't know the station yield. No, we don't. We don't know the station. No, we don't.
Yeah,
how do we know the station yield of each station?
Yeah, we do. We know that the cycle time. So yield is a function of experience. Yield is a function of perfecting the process. So I don't want to talk about yield. Yield, if they don't yield 98, 99%, then they're not going to be in business. I'm very confident that they will solve that if there's any yield issues, they'll solve that. But we know the cycle time of the entire system, of end to end. The cycle time is 60 seconds.
We don't know the actual cycle time. That's the thing. We don't know real cycle time. We know what they've designed to. So yeah, anyway, I'm not trying to
my experience is that they generally exceed what they're designed to, and that they'll move from, a cycle time of, 5 per minute, 5 per hour to 1 per minute over the next year. And then I just look at the number of machines they've got and what they will need to go from 250,000 a year, which is what I believe their current production capacity is, to 1 million a year.
Yeah, all I'll say is, they've got to get those stations to that run rate. A lot of those stations are running 25% of the rate. They're running, one shift. So I mean, it's just saying that there's installed capacity, there's realized capacity. And if I'm Tesla, I'm not buying 500K of installed capacity day one, because I'm going to go back to Schuler. I'm going to go back to Trump and say, look, I'm getting down to 30 nanometers on the hood, but I need, 30 microns. I need 10. So I want Gen 2 of this machine next year, and I want a 10 micron capable machine. Mm-hmm. So I don't think they're going to blow the whole wad, like installing all this capacity up front and then not using it for, in its full potential. I think they're going to want to actually upgrade the factory in about a year.
I'm absolutely there with you, Jeff. And that's why I'm giving them 2 years to get there.
Yeah.
I'm absolutely with you.
Yeah.
But
okay.
So I it's very clear to me that it's a 2-year cycle. And so I'm not talking about doing $1 million a year next year or this year or whatever. But I think we will do 100,000 next year. I just, that's what's in my gut.
Yeah.
I've walked these factories before. I get it. I understand exactly what it takes. But there's a hell of a lot of confidence in that team, I tell you. It's not often I've seen a team this early in the cycle, this smug. I think that's the only word I can use. They just felt, Lars looked like he was enjoying himself. That's all I can say.
Yeah, no, that's good. And the thing I'll say, and pass it back to Alexander, was I would like to hear what Tom Zhu has to say unfiltered, and because he's the receiver of all those parts up in the General Assembly. Yep. So all those things were going up a conveyor. We don't know how well they fit together. We don't know if they're binning. We don't know what's going on at General Assembly. So I'd love to hear that, and then I'd love to hear what a couple of the supply chain leads think in terms of.
Jeff, you looked at those trucks just like I did. On the floor, on the day.
Yeah.
The simplicity and the clarity of that structure just blew me away. But when I saw the simplicity of the manufacture, those machines have to be accurate, blah, blah, blah. But my word, this changes how you make cars. I don't understand why they'll ever go back to steel or aluminium.
Yeah, no, I'm with you. At scale, I believe this will be the highest gross margin auto product line that they have because of those DFX factors that they've done. So yeah, we're aligned on that. Thanks, Larry. Alexandra.
I'm sorry, I'm still stuck on that Bloomberg article. And again, I don't want to, ruin the mood, but and again, maybe it's just all wrong. But since we have Gary here, and probably Larry knows this as well, when you do merit-based stock allocations, so you do them end of 2023 and therefore 4-year span, it doesn't cost you cash, right? Because you allocate stock. So it goes on the balance sheet for a fourth of that amount because it's spread over the 4 years. Is that how it works?
My understanding is, Gary, yes, that's usually how it works. But
so it doesn't cost anything, and it's just a balance sheet.
No, it has to go through the P&L. You have to expense it, but it's not cash. It's a non-cash expense. You have to expense it. You can't just say, we're going to put it into the balance sheet. There's got to be a way it flows through the P&L. So it goes through the P&L as a non-cash expense. So it doesn't impact cash flow, but it's definitely an expense.
Okay, and so it will reduce actually the next 4 years because this quarter expense that you don't do this year, you don't do it again next year and the 2 following years, correct?
No, if you had a 4-year vest, let's just say it's an equal 4-year vest, you're going to do a quarter each year. That's the way it would normally work in most of the firms I've worked at.
Oh, so by not doing it this year, you actually impact the next 4 years of financials. Is that correct?
In theory, yeah. But again, I looked at this story and I don't think it's important. I don't know why anybody's even talking about it. It's not, you're going to catch up at some point. So even if you say, let's omit the first year, you're still going to have to expense it if you're planning to do it over 4 years. So to me, it's kind of like a dumb story. I mean, Bloomberg's running it as a lead story, but if I were waking up in the morning and seeing this, I wouldn't react to it one way or another. It's an accounting issue. It's accounting. It's not like real stuff.
Okay.
You know, I was one thing, I was listening to Larry speak, and I agree with a lot of what Larry's saying. I think cyber is going to be huge. I've said that for a couple of years. I think you get a huge halo effect, similar to what you got with Model Y. It was new category news. It's bringing people into the stores. They're buying other things. And I think people are underestimating that. So as I look at 2024, to me, that's the big story. The second big story is the EV credit goes off invoice. And, you know, yeah, it may not go on rear wheel drive Model 3 or long range, but I do believe Tesla will figure out a way how to get it at some point. And I think, you know, Model Y, if you look at just the price of Model Y after that credit, it is so cheap now. I don't know how anybody could buy anything else where you can get a Model Y for, you know, under $40,000. And then the third big story is going to be, as we get to the late part of the year, it's going to be the $25,000 vehicle. You know, there are people like Ron Barron who, you know, who knows if he talks to Elon, but, you know, he's already saying, and Ron's a pretty conservative guy, you know, that it would come out late 24. We're starting to hear that. It seems like they're trying to hire for at all the different gigafactories. So we will, as a Wall Street crowd, start thinking about that next year. And, you know, once Cybertruck is out there and we can quantify it, this will be the next big thing we talk about. And then it's going to be bots. I don't put bots in my calculation, but you can get some pretty big numbers. And I, you know, to it, I said, look, if I were going to put it in, you assume a certain, you know, dollar per hour, certain number of hours per week, which you could say 24 hours a day, 7 days a week, or you know, put some downtime for charging. But it's a $6 billion revenue opportunity if they can get it right. But they have to show that it works. You know, unlike FSD, which still, you know, hasn't yet proven that it works all the time, that it's reliable, it adds value, or it's useful, as Elon likes to say. And there has to be some unit economics that everybody can say, okay, that makes sense. But I do think it's a huge opportunity, but it's not a 24 type number that people are going to put into their P&L. So, you know, for a living, we deal with uncaptured expectations of the future fund. We're looking for growth stocks that have uncaptured expectations. So, you know, NVIDIA, I heard you guys talk about NVIDIA before. You know, there's a lot of expectations in NVIDIA stock. People ask me why I don't put energy in. Energy, most of the street is putting 8 to 10 times increase in revenue for energy. So I'm not smart enough to know if there's uncaptured expectations. But I do know for next year, the street's too low on volumes because of the halo effect, not because of the Cybertruck, because of the halo effect that comes from the Cybertruck. If I use 2020 and 2021 as my model. And I do think people are missing that auto gross margins will stabilize as long as Elon's gotten some religion this year that just cutting price doesn't always result in volume growth. I think he'll continue with what you've seen in the fourth quarter, which is selective inventory discounts, giving free supercharging miles in lieu of cutting price. Because when you cut price, an analyst like me has to put it in there forever as a price cut. Whereas if I just do an inventory discount, I'm being true to my PM as an analyst. I'm basically saying, look, they have inventory, they're going to discount it. Next quarter might be something different based on how much they're producing and what the order flow is. So cutting price is a huge negative. Inventory discounts is a 1 quarter negative. And it looks to me like that's where they're kind of going. And hopefully as, you know, we get into 2024, it'll be the same.
So Gary, I'm so happy that you mentioned the bot. And I know you said, I want you to be more precise about what the bot needs to do and show before you will add it to your line items. You've got Adam Jonas, Morgan Stanley, just dropped a report talking about the bot, not only the humanoid bot, but they recognize that Tesla is the leader in real world AI, which is anything that a camera. And they talked about an Cambrian explosion of, you know, beyond the $30 trillion opportunity for labor market. Anything that has a camera on it can be, you know, told and be able to take action. And Tesla is the leader in that space. So at least they're writing about it. They're talking about it. Now, when do other Wall Street analysts not only start talking about it, You know, at least you said something about it today. That's great. But when will you do it? I mean, you know, you saw the demo, but that's not enough, right? You need to see, let's say they drop a demo where it's actually physically working in a factory sometime in 2024. Would that be enough? Or do you need to see 10,000 bots and then you'll say, then it's a business? What is it that you need to see?
Well, again, FSD is the model, and Elon's been promising FSD that it'll drive itself.
That's
That's important.
FSD and robots are totally different things.
No,
they're using the same brain, but
it's the same concept, though. Okay, Wall Street got fooled, and some people like Adam Jonas and Kathy Wood got fooled into putting FSD in their valuation models based on the premise that it was going to work by now. It was going to be, meaning 99.9% of the time it would work. It'll be level 4. We'd have this big robo-taxi network out there. And now we're talking about having a big bot network. So we have to show that A, it's reliable, it's useful, right? It doesn't malfunction, it's useful. And there has to be some prove out on the unit economics, meaning, you know, here's what it costs versus here's how it's useful. And so you could quantify and say, okay, if it replaces labor at, make up a number, $15 an hour, and it's 18 hours a day, let's assume 6 hours a day for charging, and let's just say that's 360 days a year, then each bot is worth $97,000 in, we'll call it value created. So if you're going to charge me, let's say $20,000 or $50,000 for that bot, and it costs me $20,000, that's $30,000 multiplied times however many pay. We don't know any of these numbers. So until we know the numbers, we're throwing bullshit up in the air, which, you know, and that's what the whole robo-taxi thing was. You know, people are just throwing numbers out there and creating instant value of $100 to $200 a share, which never manifested itself. So until we know how reliable it is, and what its uses are and what its unit economics are, you can't put it into a model. You're just making stuff up. Same as FSD with robotaxi. It's the same concept. People bullshitted their numbers with robotaxi and created out of thin air, you know, $100 to $200 to $300 in value, but all they did was make up a bunch of numbers and multiply them on the calculator. And so you need to have some prove out of what this thing does, how it's useful, how reliable it is, and what are the unit economics. And then people will put it into their models. It's very similar to robotaxi. I never put robotaxi in my model because I just didn't believe the numbers that people were putting out. You know, so my FSD incremental value is that I assume a 15% global take rate. I take $12,000 times a half, $199 times a half, and I put that into my model, and it adds, you know, I think on my $22 of earnings, I think it adds, you know, a couple bucks maybe, you know, that's included in that $22. That's what I do with FSD, but I'm not going to assume there's a whole network of robo-taxis out there where, unless, you know, somebody could show me that it's going to work everywhere. And I think the same is with the bot. We don't know if it's going to work. We think it'll work because, you know, Elon can land rockets, you know, back on their launching pads in the middle of the ocean. Well, yeah, that's true. But does that mean that the bot's going to be useful and be able to, you know, clip flowers and, you know, cook for people? And maybe, but I think it's premature until we see the thing in action. That's me. I know people are going to argue with me about that, but
I agree with you, Gary. I think a good metric is, like, it's in the stock a little bit. Like, they see the bot. People could, you don't have to put in a model, but people, and I said this before, when they buy stock, that's in their head, right? Like, oh, this could be down the future. It could be somewhat in the valuation without actually being modeled out. But I would say sales is a good metric. Like, are you making them? Are you selling them? And then you could incorporate some of that. Yeah. So, but I agree with you.
Can we sell 200,000 of these a year if the use case is proven out? Sure. If you charge 50 grand, and if, using my numbers, if you could replace labor at $15 an hour, 18 hours a day, 360 days a year, that's $97,000 a year in savings. Okay, so you definitely could charge $50,000 for that if it lasts, you know, for, I don't know, a couple of years. Assume it can, but you know, we're making up stuff. We're just assuming numbers. And look, as an analyst, you got to be real and you got to be true to yourself, and you can't just. And all these people that put money in for FSD robo-taxis are now taking the numbers out because they never proved out. And I don't want to do that. I don't want to put something in and have to take it out in 3 years because it didn't get there. I do think there's an opportunity there, and I think it's going to be huge. I just can't quantify it.
Gary, I think you can quantify one thing though. You know, Ford has come out with this blue, what is it, Ford Blue or whatever, their ADAS.
Blue Cruise.
I think that there is a price that Tesla could charge for a solution that is not FSD. And I think they'd get a huge take up on it because
What kind of price do you think?
it's an interesting question. I think it's in and around the $3,000 to $3,500 mark, because I think that's roughly where Ford is, or about $80 a month, somewhere in that region where that doesn't give them FSD. They would have to upgrade it to FSD when FSD comes out. But instead of paying the full FSD and waiting for FSD to come out while they use the driver assist, they could use the driver assist directly. I think that's a reasonable deal. Because,
And how would it differ from enhanced autopilot?
well, it would give you all that, that FSD is giving you, but without guaranteeing you FSD.
No. I mean, I don't know if people would pay, let's say $3,000 or, $80 a
Oh,
month.
I would.
Wait a minute, for somebody to assist you with driving as opposed to actually driving.
But they're paying that to Ford right now. That's what Ford, Mercedes are charging more. But that's the price, and that's the price on the street right now, Gary.
But are the people buying it?
Yeah, for sure they're buying it.
How many?
The rate at which these.
I'm asking because.
All right, so we can argue about whether they would buy it and at what number, but Tesla are getting a 15% take up in the US, 8 to 15. I'm not sure what the number is.
Let's call 15. I'll give you 15.
All right,
a lot of people were buying it assuming it would work.
Charging a very, very much higher number for that functionality. If they charged a much lower number for that functionality, they would get a much higher take up.
No, maybe.
I agree with you, Larry. And just to jump in, I agree with you guys, and I thought of that too. Why not just bring the price down of FSD, and then you increase the take rate, and you'll make money that way? Again, Elon will go against everything he said. Elon said, the value of that FSD would be 10, 20, 30, 40,000. He would be literally admitting defeat to the robo-taxi network, something he promised. And that would go again to his credibility. It might not matter. He can make an excuse. I was wrong. But it's going against everything Elon has said for the last 5-6 years. He might backtrack, but I think it would be tricky.
I don't think it would be tricky.
Estimates might come down, guys.
Quite happy to admit he's wrong. I don't think.
But estimates might come down. I mean, every analyst that I know puts some take rate in for FSD. I put in 15% by 2030. So if you take my number of 15%, and you say that's at $12,000, let's assume make up your number, $3,000. In order for estimates to stay the same, I've got to get 60% take rate, right? Because I'm cutting my price by from 12,000 to 3,000. So relative to today's expectations, again, think of uncaptured expectations. Unless you're getting a 60% take rate, you'd have to take your numbers down. Follow me? Right now, I'm assuming at $12,000, I get a 15% take rate.
Gary,
if I charge $3,000, then I need a 60% take rate.
Yeah, but you're getting a take rate for 15% of US buyers. What happens if you get a...
No, total, global.
Oh,
I'm using global. I'm using global. Yeah. Because US is about 15 today, and China's like 1, and Europe, 8. But I'm assuming it's going to grow over time. So I'm always looking at 2030 and trying to, discount back. And look, we just have to recognize that,
You've lost me there. What do you assume the take rate is today?
I don't look at today. I look at 20.
Oh, no. You see, you're confusing two completely different things. I'm talking about a different product between now and 2030, or 2025, or 2026. I see a 3-year cycle before we get to full self-driving. I'm thinking about a product that you can sell today for which you'll get very good take-up.
But you're going to cannibalize that.
No, I don't believe you will.
Okay, well, or you're going to cannibalize the enhanced autopilot.
You will definitely perhaps change the nature of the offering for enhanced autopilot. Yeah.
People have numbers in for autopilot and FSD, but the take rates people should be using are pretty low. And then over time, as FSD gets better, I grow mine. So I'm telling you, today, I think the US take rate is somewhere like 12. Europe is like, 8 or 7 or something. And China's like 1, right? So you got to grow those over time if you're being true to your model. And then you got to say, okay, if I have 3 products instead of 2, so what you're suggesting is I have an enhanced autopilot, which I have today. I have an FSD today. You're saying there's something in the middle. You're still going to have to factor in some cannibalization.
Yeah, we could talk about the product design, but I'm not sure you would have 3 models. I think you'd have 2, but you change the positioning of enhanced autopilot. You know what? We're getting into the levels of detail that's not really helpful.
So anyway, I go back to what's in 2024. I'm more bullish, it sounds like you guys are, because I do think you get a halo from Cybertruck. I think all this interest in Cybertruck brings people to the stores. They get to the stores, they buy a Model 3, or they say, look, I'm not going to be able to have a Cybertruck for 2 years, but I really like Tesla. So I'll buy a Model Y or I'll buy a Model 3 in the meantime. And by the way, I get a $7,500 off, plus they're giving me $1,000 to buy something. I just think we're going to see in the first quarter a pretty big number. And I think, can you get a 20% move in a month? I mean, I was looking at Bloomberg has a function. It's called seasonality. You can look at what months the stock has moved over the last couple of years. And what you see, and I think, Herbert, you said this earlier, December of 22 was down 36%, and it was up 43 in January. That's kind of the flip, right? Because it came down because they cut price in China, and people assumed they were going to cut price in the US. And then when they actually cut price, then people bought the stock. And that was why you almost have to strip those 2 out, though, because they kind of screw up the numbers. But what you generally see is that from October to December are usually pretty strong months. And then June and August are usually pretty strong. It's probably because they do kind of, either AI days or whatever. People anticipate them. In February through May usually suck. But you definitely could see, people all wake up and say, oh, wow, this $25,000 vehicle is now coming at the end of the year. Let's put it into our models at a much bigger number. I go out to 2030 and I say Model 2, we'll call it, 3.5 million units, Model Y of 3. I use Cybertruck and a Cybertruck 2 because I'm assuming there's going to be a smaller version of 2 million. And then Model 3 is 1.5. That'll give you 10 million. And I have 100,000 of S and X and 100,000 of semis. But, I'm using 10 million as a number for 2030. The street's at 5.8, right? So there's a huge delta between where and then there's another delta because Elon still tells people 20 million, right? So if suddenly we wake up and there's a Model 2 that can sell 5 million units in a year, that's what can make the stock go up 30 to 40% a month.
Okay,
I hear you, Gary, but like going out to 23rd kind of hard, right? There's a lot of variables going on, especially with something like Tesla, right? A lot of, moonshots, some more realistic than others. What do you got them doing for next year, though? A lot of people only have them doing maybe 2.1, 2.2 in units next year. Okay, so you're higher than like most people. So what if they come in at 2.2 and margins barely move? The earnings are going to be flat. So why do you think they're going to have this huge run?
Because 2020, 21, in 2021, volumes are up 87% after being up 36% in 2020. What happened in 2020? 2 things. You introduced the Model Y and you opened up Shanghai. Okay. So there was a new category news was the CUV came out, Model Y. Everybody got excited about it. It was a halo effect. The entire franchise, I think Model 3 was up 40% in 2021. So I'm assuming not 2.4 on 1.8 is what, 33%? So I'm assuming 33% volume growth through 24 because of the halo effect, because I got the $7,500 off invoice going into Model Y, Model 3 performance. And I'm assuming at some point that Tesla figures out a way how to reclaim the rest of that credit on rear-wheel drive Model 3 and long-range Model 3. And they're taking advantage of the situation today. They're trying to get people to buy it before the end of the year. And I don't know if you guys have been watching the China numbers, but they were fabulous last night. If you start assuming the last couple of weeks of run rate in China for next year, you're at like 1.1 million in China. I mean, you're at a huge number. So, I just think there's a lot of opportunity for next year that really feeds from the Cybertruck drawing interest to the whole franchise, just like Model Y drew interest to the whole franchise in 2020 and 2021. That's why I'm higher. And so my earnings number, there's two pieces. It's volume and then there's margins, right? My earnings number for 2024 is 420. The street's at 390, right? But I'm assuming 22.4 million units, the street's at 2.1. And I'm assuming margins can get back to 17.2 from they'll be about 16 in this quarter. So I could be wrong. If Elon wakes up on January 5th and says we got to cut price again, then all bets are off and the stock down another 20, 30%. But I think he learned something this year. I think he learned that by cutting price, he didn't get that much. And I know everybody's going to say, well, it would have been worse because of interest payments being high. Bullshit, okay? You could have bought down interest rates if you wanted to, the way GM and Ford do. You didn't have to just cut the price. You could have done other things.
Well, if you do it the other way, Gary, you're losing the money as well, right? Because I was thinking about that since our discussion.
But it's different.
Exactly.
It's different.
Oh, so it's different because it's in a different line of your spreadsheet. That's what you're saying. It's the same amount, but in a different line. It's a different spreadsheet. Okay.
It's not a spreadsheet. It's not a spreadsheet. Just think accounting. Okay. It's still going to be that you're going to have a reduction in the price, but it's going to be that's the present value of the difference in the interest rate. So instead of interest rates at 8, you said, okay, I'm going to buy them down at 3.9. That 4.1% is going to be a discount. It should be treated as a discount to your price. It should be still viewed as a concession, largely the way an inventory discount is. Now, the accountants have disagreed with me. When I put this out, I said, because they don't do the loan themselves. They get a bank to do it. So it's effectively, they're creating a loan, they're selling it to the bank. So I think they would have to recognize it in the quarter. So it affects gross margins in that quarter, but it's a present value of the difference in interest rates market versus what they're buying it down to. That's, over, let's say, a 72-month loan or 60-month loan. And so if you figure out what is that worth on a $50,000 car, you're going to come up with it's about $3,700 discount, which is surprisingly about the same as what they're discounting Model 3 and Model Y at. So it's still going to hit gross margin line.
Exactly. For me, this is just financial engineering, left pocket, right pocket. But on top of it, the people telling you they didn't have loan, they were mostly right. They did build up a loan portfolio up to about 1.2 billion, which they now securitized and threw it out as an asset backed actually very successfully. And on that one, they made a margin win. I just don't think that is Tesla's way of doing. I don't think they do financial engineering to hide something in a lower part of the balance sheet, when in fact what they want to do is cut the price of the car because they want to make that car affordable. So why do what the GMs of this world do and just hide behind zero interest rates when it actually they are 7% and they subsidize their financing arm? It just doesn't make sense. Tesla won't do that.
Because you're not destroying the value of the company. So again, if you cut price by $3,000 to $4,000, an analyst who's being true to his model is doing that forever. If you just buy down the inventory and say, okay, I got all this inventory out there, and I'm going to put an inventory discount of 3 to 4, you only have to put it in for 1 quarter. It's a huge difference in value destruction. One, you're doing it per quarter. One, you're doing it forever. And it's the same thing with a margin.
Well, because guys like you put this then extrapolated over 5 years into their spreadsheet. Like but what do you know?
Okay,
let me pause.
I could die tomorrow, and I'm telling you, this is the way Wall Street would think. Okay, I'm not doing anything. I'm not leading Wall Street. I'm just doing what Wall Street does.
Okay, let me pause for you guys for a second. But this is a great conversation, and we disagree that it's not in any way causing value destruction for the company. In fact, reaching price parity and becoming cheaper than ICE cars and the average price cars. That's the goal. We're there now. Let me pause for quickly. This conversation is through the roof, incredible. Folks, please follow the panel, follow Cyberbulls. You can see that one of the speakers there, Cyberbulls 1. And then we do these regular spaces. We have also a video that we do on the YouTube channel. Alexandra, Christian, Jeff, and Xander. And we've got Larry and Gary, and we had Sawyer and others join us as well. And then if you can, please forward this to invite other people to come join us. That would be fantastic. So I do have another question for you, Gary. I don't know if you're aware, and I want to make sure you are aware that when Tom Jew was speaking on the stage at Investor Day, and he was talking about gig in Mexico, he said that we're going to have 10,000 employees. And imagine, he said, if we had 5,000 bots, what that could do for the cost reduction. So even if Tesla does not sell this and you don't get your price, you don't get your margins, you don't get your kind of line item you're going to put in, at some point, 5,000 bots can and should impact the margins of an auto gross margin and all that. So I just want you to keep that in mind and put that in your back of your head that could also be a scenario that can happen in the future.
If they're useful, if the bots are useful. And it's, again, I go back to 2019 when Elon, not Tom Zhu, but Elon said, this car is going to drive itself by the following year. So if the robots can be useful, you're right. You could dramatically cut the cost. But I want to see that the robot actually is useful and can do things like, pick up a box, put it on the assembly line, do what humans do.
You're aware that there's already companies like Digit that has no fingers, that can't really walk very well, that's already being useful in Amazon factories. There are other companies that are already promising that they're going to be sold already. So we're there. But yes, just keep that in mind. Keep that in mind that there's already companies that are selling bots that are already working in a factory today. Just that. Without a brain and without hands.
I know that.
Okay.
I get it.
And I'll just say real quick, Gary, we talked about this before. Like, I understand what you're saying and what you think and how you would run the business. Next year, if the demand's not there for whatever reason, I'm not saying it's not. I'm saying if it is, Elon will cut to move units and everything you're saying will go out the window.
Yeah, it's true. Look, I'm still a bull. It's our second largest position. We believe in the vision. We believe in the execution. We believe in the strategy. Sometimes it doesn't come off that way because I come from the institutional world where even as a bull, you're paid to show here's the positives and here's the risks. And that's what institutions do. And that's why, Adam Jonas does that. He does it in his reports. And it's funny that when I try to do it, I just get slaughtered. It's like, well, why don't you believe in Elon? Well, no, I'm just saying here's the positives and here's the risks. And there are risks. And even as a bull, you have to be able to say, here's the risks of next year's plan, which it sounds like the cyber bulls are saying there's risks.
Let's invite up a person who's not a bull at all. Let's go, Warren. Tell us your bearish view of Tesla. And, you and I did an interview. We dropped that video. It caused a lot of waves because of your statements and belief that you were very careful about it. You're not 100% sure, but you were saying that possibly the Gen 3 compact car could actually be delivered in 2024. Do you still believe that?
Yes. If you read the bio, Walter Isaacson talks about Elon walking the pilot line in Giga Texas. We talked about that. Did you go back and look at that?
I did, and I cut it out and I read it. But you got to say that there's one key word. It's design. I'm going to go find it and I'll read it to everybody. But meanwhile, you can read it either way.
Yeah, but the point is they've been working. That was 6 months ago, roughly, maybe more than 6 months ago that they were working on that. He's talked about it multiple times that this is a totally new manufacturing method. Joe Tetmeyer has got videos and he's been talking about it. Looks like they've got the equipment there for the line for the next gen vehicle. And in the Q3 call, they talked about how it was going to be much easier to ramp than Cybertruck, and they described it as utilitarian. It's the Cybertruck is the Swiss Army knife of trucks. The next gen vehicle is apparently a very simple vehicle to build, and maybe has less features than we're used to on a Tesla from a hardware side. So I think I'm not saying it's likely, but I do think there's a strong chance that they're ahead of. They delivered Model Y quicker than we thought, and I don't really think Tesla worries about the Osborne effect, but if you do think Tesla worries about the Osborne effect, then it would make sense for them not to reveal details of the next gen vehicle until they're really close to delivery, because if they're worried about cutting into sales, the first vehicle it's going to cut into sales of might be 3 or Y.
I agree with Warren. First time I've ever said that. I agree 100%.
So wait, whoa. Okay, whoa. Okay, first of all, let me read out what Walter Isaacson said in book page 5. But here's Gary also agreeing that the Gen 3 compact car might be delivered 2024. let me, before you answer. So this is what it said. Walter Isaacson, page 505 of the biography. He said, so in May 2023, he decided, Elon, to change the initial build location for the next generation car taxis to Austin, where his own workspace and that of his top engineers would be right next to the new high-speed, ultra-automated assembly line. Throughout the summer of 2023, he spent hours each week working with his team to design each station on the line, finding ways to shave milliseconds off each step and process. So the key word might be design. That maybe that's still just the production plans, not an actual production line. So debatable.
I'll give you that.
You can't.
And Gen 2 not coming out in 2020. It's not happening.
How do you know?
There's no plans for it. It's not even started yet.
There are plans for it. No, there are plans for it.
No, I mean, there's plans for it, but no, it's not. Look, I'm bullish. I'm just saying, again, running away with these ideas. Okay, I'll be proven wrong. If that car is made and sold in 2024, I'll be wrong. I think it's a 5% chance or lower that happens.
Warren's 100% correct that this is a much easier build to take from design to actually put into production than Cybertruck. It's like Model Y or Model 3, but they've done that already. So why
I totally disagree with that.
Yeah.
I totally disagree with that.
Okay.
I think
Good.
Jeff. Well, hold on. Give us your reason why. I love to hear it because I love to hear your.
Well, first off, I mean, there is a process of line design that you do without a physical line being there. So you actually, you're going through and basically you're trying to understand, like, first off, you're going to go through the overall method of, like, how is this thing going to go together? And obviously they've decided to do this parallel processing method. And then they go through detailed station design of, like, what gets done where. That can be all kind of prototyped without having a physical line there. And then you go and then you convert that to actual prototype tooling, or you can go straight to production tooling. My point is when you read that excerpt from I agree with, Warren and Herbert, like, that could go both ways, but I'm leaning towards, like, them going through the design of the line and, like, what they want to do versus, like, they've cut all the tooling and everything's in place. So they're in some indeterminate state. What you need to hear from them is you need to hear that they are done, like, with the industrial design of the vehicle. That would be one big, huge data point and how the whole thing is packaged together. And then you would need to hear that they're either going for production tooling or they're like when Elon said last May of 2022, he said that they're done with the design of the Cybertruck. And that was the cue for them to go release production tooling for the factory, which takes about a year, depending on the complexity of the operation. It could be less, it could be more. But in terms of this being like Model Y, this is not going to be like Model Y. Model Y was a high derivative of the Model 3 in terms of part reuse, in terms of design reuse. So I don't know what this vehicle is, but in terms of its overall complexity and part count, that should be a lot lower. So it's a mixed bag, but I don't see it having high reuse in terms of design reuse or high reuse in terms of part number reuse. Well, part number reuse could be there, but in terms of, like, unique mechanical parts, I think it's going to be very different. But yeah, can they reuse the 40-volt architecture? Can they? I don't know. I don't think they can actually reuse a motor. They're going to have to get a sub $1,000 electric motor. So there's a lot of new stuff that's going to go into this.
So, Jeff, one of the key components of this car, of the build of this car, is going to be a paint shop. A paint shop is not something you can hide under covers. A paint shop, Joe would have seen a long time ago the paint shop being schlepped in. So there's no doubt that there isn't a paint shop for this new car. And this new car is going to need a paint shop because there's no way they're going to put, 500,000, 1 million, 1.5 million cars through that factory without another paint shop. That's the first thing I would say.
But this is in Austin we're talking
about.
Yeah,
Yeah, I'm talking about Austin.
So how long would it take to add a paint shop in Austin?
9 months, 6 months to 9 months.
Sorry, this is not a traditional paint shop. If you followed the unbox process, They're not painting the whole car at
They
once.
don't have to, but they still need a paint shop.
But it doesn't have to be the same size that you're used to when you have to do a whole entire car body in the
But a
paint
paint
shop.
shop, you know, it's not the size of the paint shop. It is the componentry to, you know, that you have to remove the gas, remove the fumes, to maintain the pressure in the shop. You know, even if it's a small paint shop, it requires a significant installation, Warren. This is not trivial.
But Jeff, do you agree with Warren that they would not announce this thing until they're ready to start producing because they don't want an Osborne Model 3? Do you agree with that? They're not going to announce it the way they announced in advanced stages of Model Y or Cybertruck. They're going to have to wait till the last minute to announce it.
Yeah, I agree. And actually, the other big thing is they're not going to do like what they did with Cybertruck, where they have the unveil event and there's 20 cars or there's 100 or whatever. They're going to have many. This is not something you want to go into the configurator and have to wait 9 months for. This is not how people buy $20,000 cars. So the other thing that they're going to have to do something more similar to the smartphone industry, which is when you come down in price like this, they're going to have to do, I think, a very large pre-build to get this product into inventory everywhere in the world. Because again, I don't think this is one of those things that you just, you put an order for and you're going to wait a year for. I don't think people are going to be up for that. So they're going to have to do a big, in their schedule, they're going to have a pretty big build cycle in that schedule. And that's not like they've done their other launches before.
Second thing, there was a moment in the Sandy Munro interview. Elon dismissed Cybertruck as not material to the stock. And at one point, and then another point, Munro asks him about the next gen vehicle, and Elon says, "I can't talk about anything that's material to the stock." I'm not getting the quote exactly right, but like, why would he say Cybertruck, which is in production and already delivering or about to be delivered, is not material to the stock, but the next gen vehicle, which is apparently, in some people's eyes, not being produced until 2025, more than a year away, is material to the stock? It's because the next gen vehicle is the true game changer, other than some software stuff and robot. That is a true game changer for the company, where Cybertruck it's not the cherry on top of the frosting on top of the ice cream sundae, but it's not a huge material part of the company.
Yeah, the answer is, first off, I do agree that the 25K car is material. The question that Sandy asked him was about the schedule, and he asked him a very specific question of like, where are you at in the schedule? When are we going to see this vehicle? And that response would have been material to the company in either direction, whether it's a favorable answer or non-favorable answer. So I don't think he can answer of it shipping, in this period at this date or this month or whatever. I don't think he could have given that answer. That's why he did. But I understand why you brought that up, though. It's a good
wait, just hold on, Gary. I want to welcome Sat and Farzad up to the stage. Farzad, you're not going to believe that the world's turned upside down. Gary agrees with Warren. Gary thinks that the Model 3 compact car is going to be here in 2024. Let's hear Sat's question, and then we'll get you, Farzad.
One thing I want to point out is that historically, this is the first time that Tesla is trying to go to the next platform without doing a second car. The platform was with the X, and then the 3 with the Y. Now Cybertruck, now they're going to the Gen 3 car. There was on the slide in Investor Day, there's another car that's supposed to be, or vehicle that's under the Cybertruck platform. So I'm thinking that at some point they had to stagger doing multiple vehicles at the same time. But this is the first time they've been moving on to another platform and even another manufacturing process that they didn't do before. And I think that's pretty material. But we don't see it in real life. Like, it's not physically there yet.
Unless it's the same platform. We'll talk about that later. Farzad.
How's it going? I see Warren and Gary in the same space I joined. You guys, come on. This is like history in the making. And they agreed? Is that true, Gary? You guys agreed on something?
They did.
We did.
That's unbelievable. America's healing. This is amazing.
Next thing you know, we'll see Trump and Nikki Haley and what's his name, DeSantis agreeing on something.
Yeah, good luck with that.
It's a true bromance.
I love
sides.
Look, the Model 2, if it hits this year, and it might slip to next year, I'm not saying it's going to hit, but it could get out this year. That is an unexpected expectation. It's an uncaptured expectation. People on the street are not looking for it to hit this year, and that might be why Elon said, that's a material event, because from a timing standpoint, most people are thinking 2025. I'm just thinking everybody in the company seems to be focused on this. They're doing hiring, in 3 different factories for it. It feels like they're working on it, and they've been working on it. And I disagree. I don't think it's as involved as trying to do Cybertruck. I think it's more closely aligned with what Model 3 is, even though I agree with you, it's a next-gen process. But Elon seems very, very focused on this.
He also said that in the Monroe interview that they've been working on it, the lines on designing of it a lot already.
Yeah, I think the most interesting thing here is that, and I heard other folks talk about this. I think it was Omar in an earlier space today. I really agree with the notion that 2023 has been this sort of foundational year for the company. I mean, you really think about it, ever since COVID hit, Tesla's been in this sort of hibernation phase of sorts, where they're just trying to figure out how to get Model Y, Model 3 ramped up, getting the Highland thing out, getting the Plaid versions out, and then the Cybertruck has been sort of the focus for everybody to say, okay, when is this thing going to come out? Is it finally going to come out? And it certainly feels, ever since the biography came out from Walter, when we got all that detail around them deciding to go with Texas before Mexico for the compact car, and given that we got verbiage from the company that said this is going to follow a more quote-unquote traditional type of manufacturing, but with different ways of building the car from, say, instead of having a sort of a linear path, having more of a parallel path with multiple steps sort of next to each other. Like, why wouldn't that signal that the project is ahead of schedule, right? But I don't know by how much, right? And I think that's where I kind of agree with Gary, where I wouldn't be surprised if it's pushed out to, say, 2025, even maybe 2026. But I think the other thing we have to think about here is that the overarching, like the rest of the economy, and if you maybe this is where Gary and I will disagree, I still feel like there is a giant void for an affordable vehicle, and just especially in the US car market, that this compact car would directly address. And if Tesla is able to accelerate the timeline because they're doing it in Texas, and because it's following quote unquote a little bit more traditional ways of manufacturing than the Cybertruck, this is something that will fall directly in their ability to take market share that no one else is even capable of competing in at all. Nobody's going to be able to come out with a $25,000, $30,000 EV that's going to be profitable. It's just impossible. So that's kind of how I'm thinking about the product. And I think there's something else to be said about Cybertruck too, is, and I've been reading Larry's post here, and I told myself my New Year's resolution was, I'm going to temper my expectations, because I have this habit of being overly optimistic, and I know that's one of my weaknesses, and fucking Larry makes it so hard. So I'm still going to stick to my guns and say that Cybertruck, it's probably going to be slower than all of us want, but I wouldn't be surprised if the long-term, let's say, yearly run rate for that vehicle is closer to 500,000 than 250.
Can I just ask Jeff a couple of things? The first thing was, Joe Tetmeyer has been showing all this equipment showing up outside Giga Texas, and either waiting outside the factory or going in the factory, and Joe is speculating that that's for the next gen vehicle. Does that make sense to you, and where does it suggest to you they are in the process of building the line?
Yeah, they could be building either a low volume, a prototype line, or a low volume pilot line. That could be happening, but I mean, there has to be something discernible, like what he identified in a drone shot, that says that that's next gen, that's equipment for the next gen line versus just more equipment for a Model Y line or equipment for a Cybertruck line. That would be my question. And one thing, sorry, you had another question, Warren?
In the interview with Monroe asked him directly about the unbox process. Sandy was not on his game that day, but he asked him about the unbox process, and Elon avoided answering that question and just sort of gave this is going to be a manufacturing process like you've never seen, which is sometimes Elon goes over the top. So I was curious what you thought about that. And also, what do you think about how a paint shop would be, given that the unbox process involves not painting a whole car?
Yeah, on the unbox process, I think what they're going to be doing is probably the highest level of parallel processing that we've probably ever seen in car assembly. Right now, or even any device assembly. And when you can do that, you have this multiplicative effect on process time, and as well as the square footage and the output per square meter in the factory. And that's obviously very powerful. It's really, I mean, it's really powerful for the cost structure of a product. It may be the ticket of like what's needed to bring any EV down to that level and be profitable. So I'm pretty bullish on what they can get to with unbox. The other thing, I think they're going to use more of the Z space as well. So I think this is going to be a very unique approach to assembling, where you've got more advanced parallel processing and more use of not only X and Y but the Z plane manufacturing. So I'm pretty bullish.
You mean they're manufacturing stuff on the 4th floor, and it comes down to the 3rd floor, and it comes down to the 2nd floor, and it all comes together on the 1st floor, something like that?
Well, they're doing multiple floor assembly already. I'm talking about being able to actually maybe potentially stack operations, or just be able to use kind of more of the height of the operation versus just kind of being capped off at a certain level. So we'll see what they come up with, but that's kind of what I'm thinking that they're looking at. But I will give you, Gary, one thing on this, on this pull-in, and to feed that theory. And this is like there's no denying this. Pulling it into Texas is a schedule like that. Whatever the schedule was for this vehicle, building it in Texas, building it in an existing operation is definitely a pull-in. If they were trying to do this in Mexico, new factory, new product, new approach to manufacturing, I think that in a distant away from engineering, I think that would have been a total shit show. So the fact that they pulled it into Austin, the other takeaway you could feed into that is the product is ready well before, Mexico could have been ready, which means like we had to do this, like we had to get production started here. So that does lead me to believe. But again, I think we have to change our definition to what the Model 2, whatever we want to call the vehicle being done is. I view that vehicle being done when they can have a certain rate of production and they have a certain amount in inventory, versus basically launching with 0 and very low rates of production. That won't work for that vehicle.
Jeff, could you also comment on the duality of engineering the line and the vehicle, that you're engineering the vehicle to be manufactured, but you're also engineering the manufacturing line. You're engineering the manufacturing line to make the vehicle, the manufacturing process. But in the way Tesla does it, you're also looking at the vehicle and saying, okay, how can we design this vehicle so it's easier to manufacture? Can you just comment on that? Is that a common way of thinking? Does Tesla do it differently than others?
Every company I teach this to companies, and I ran the design for manufacturability for a number of years, in the mobile phone world on the Android side, and designing how those products are made. Every company will say that they're doing this, but the way I view what Tesla is doing, I view that it is just above and beyond. I've talked to employees, I've talked to management in the company before, and I've seen what they're doing, and they take it to a completely different level. It's not just something that exists as a process or a checkbox. Like they actually physically organize. Like there's an actual, for example, there's a motor team. There's a team for the electric motor. And those teams, those people, they do report back up into supply chain, supplier quality, engineering here or there. But when they're together and working, that's one motor team. And that motor team kind of comes into work together and leaves and kind of solves that whole thing. So if it's build an electric motor that's $900, that has this level of performance, it's ready by this date, and it's got this amount of weekly capacity, everybody on that team is focused on those 4 or 5 metrics. the supply chain people are focused on the performance of the motor. The engineering people are focused on the weekly capacity of the, and the reason I'm bringing up that example is they're all kind of in the same boat together. And that unfortunately is not happening well, especially at older companies. They're more kind of in their own corners. Then they come together and they say they do that design for manufacturability work. That's why I view Tesla as a very, very special kind of like once in a generation type thing. There will be other startups that eventually, and there are smaller startups that do some of this, but at a much lower scale. They're actually doing what I described, at the largest scale in the automobile, the largest scale in the automobile industry is Model Y. So yeah, it's different, it's special, it's different. Other companies say they do it, but Tesla does it in a way and takes it to a level that no one else I see is really doing.
And Jeff,
I want to,
go ahead.
Yeah, I want to ask a question for the panel. So everybody answer this question, yes or no, and give me a sentence or two to add to that. And so my statement is that it's very unlikely that Tesla will create a Cybertruck line and not reuse it for the Gen 2 compact car. 90% of people I've talked to think that that's unbelievable. But for me, it's completely unbelievable that they would go through all this work to create a Cybertruck line and not reuse it. And that could be one reason why things are moving forward faster. So let's go through the panel here. Alexandra, yes or no?
How did you answer it? Well, let me answer with a phrase. I don't know whether that means yes or no. I don't think they will use the line they used for the Cybertruck, but it was a very modular line. I mean, all the people that were there can explain that to you. It's really workstation after workstation that were in demo mode. So will there be parts of that line that we will find again in the next gen? Of course we will, but it's not going to be that line. So if your question is it this line? No, it's not going to be this line.
Okay, Christian?
Yeah, no, it will not be that line.
Gary?
I agree with you. I think they'll use a lot of parts of it. And again, I think where a lot of the growth of Cybertruck's going to be is a smaller Cybertruck. So they'll use it in a Cybertruck 2 product that'll come out in a couple of years.
Farzad?
No, but they'll probably use it for the van.
Warren?
I'm not sure whether you mean the equipment that was on the line or the space where the line was demonstrated.
I mean, the same process that they build the production line for the Cybertruck would be used for the compact car. It's basically partially unboxed, and the only reason it's partially unboxed is because they don't have brake-by-wire. Once you have that, you can basically replicate what you're doing for the compact car.
Okay, I didn't see enough of the production line. I mean, I saw Sandy Monroe walk through the line. I don't feel like I understand the line well enough. My impression is that the next gen vehicle is produced in a very different way than Cybertruck. Just from listening to Elon talk to Monroe, but I think I'm going to go with I don't know enough.
Okay, Jeff?
They'll use elements like the 48-volt architecture, steer-by-wire. They'll use elements of it, but it'll be the economics of the Cybertruck line would break the Model 2 line. It would never work. So it's going to be actually radically different. But I think they are going to reuse. They're going to do some design reuse, but they're actually going to change the part number and they're going to really strip it down. Like the 48-volt architecture won't have all the nodes, all the control points that obviously the Cybertruck has, but they're going to use that architecture. But it'll be very different, actually.
Larry?
Yeah, it's going to be different by definition because firstly, they are evolving the 48-volt architecture for a start. Secondly, the electrical motors are going to be of lower power. So, for example, the steer-by-wire is going to be a smaller component. The actual motor is going to be a smaller component. They are, without doubt, going to use the control. Many of the ECUs are going to be reused, but they did point out that they're at 90% non-cross car wiring, and in the new next version, it's going to be 100%. So different production line, different designs, different wiring harnesses, everything different, but they definitely have learned an enormous amount, and they're going to use many of the ECUs from the Cybertruck. So I think I'm closer to Farzad's answer than any other Jeff, and Jeff, yeah.
Xander?
Well, the joy of going last is everyone said my answer. Farzad stole what I was going to say, which is the van is what I imagine when you say that they'll reuse the line. It's going to be a cyber van, but in terms of Gen 3, I think its unbox process is completely different line with obviously the elements that they have innovated into the Cybertruck.
In your face, Xander.
And then Sat?
Yeah, you weren't last actually. But what I want to add is also they have to use certain elements like the 48 volt for less harsh wiring to make it more affordable. But I think it'll be completely different line. But they have to use certain parts, and they learn a lot from each production that they do, each platform they do, and they have to carry that over to make it more efficient and more affordable. And the affordability is the main part of the next gen Gen 3 vehicle. And I think they should be able to stagger the van or the other vehicle on the Cybertruck platform a lot quicker. So hopefully we see something more frequently in the next couple of years.
Okay, so
and if I could add one, Herbert, it should have half the space of what was currently a production line. So it's not going to be the same. We already know it by the space.
Okay, yeah, well, that speaks to the next thing I wanted to ask, because Warren, one of the points he made was that this compact car is going to be utilitarian. It's not going to have the bells and whistles every other car they've made, the Model 3. It's going to be stripped down. It could be as easy as slapping on 4 pieces of metal and call it a day. Warren, do you want to expand on that? And then let's get Farzad and Gary's reaction and everybody else's reaction to it.
Well, like a good example is, I think someone mentioned, maybe it was Jeff mentioned earlier, the motors and how much they're going to cost. And one of the questions I have is, I think they said in their, when they talked about the unbox process before and what they were doing, I think they mentioned there would be no silicon carbide in the motors. And then I think when they were describing the Cybertruck line, I think there's 2 different kinds of motors, and one of the kinds of motors, there's like induction and permanent magnet or something. I think the induction motors don't use silicon carbide. So I think we're going to see a single motor next gen vehicle with induction motor. And there's efficiency gains and losses when you do that. You know, I think the permanent magnet motor has efficiencies at different in certain circumstances. So I think that's, you know, a critical factor in how they get there. But I think the like Alexandra mentioned, half the floor space, which is something that Drew Baglino said, it's also half the cost. And half the cost of Model 3 and Y would make it a $20,000 car. And this is, I think, one of the, I've said this a bunch of times, and I don't feel like this generated nearly as much controversy as 2024 delivery, but it's going to cost, the price is going to be under $20,000 because the price of a Model 3 is under $40,000 and half the price. And then the price in China, where I think in China it sells for like 35, you may be talking about a $17,000 car. So I don't know what people think about that.
Yeah, but Warren, how are they going to make any money on that? Well, so if they're charging $20K, how much is the cost of producing it? And then what are they going to make per car? Multiply by how many cars they do. Is that really going to be dramatically good for cash flow?
It's half the cost. If it's half the cost.
Oh, so you're saying 10,000 to make the car?
No. Well, I don't know what the cost is to make a Model 3, but whatever it is, it's half that cost, and it should still have a positive margin at half the cost and half the price. That I mean, if you have the cost and have the price, you have the same margin.
I understand, but if so, go through it. If they charge $20K for, so let's call it the Model 2, and what do you think is the cost to make it if you had to guess? I mean, we kind of know what the cost of the Model 3 is roughly.
I'm
Jeff, you would know, Jeff.
I'm
what would it be? What do you think they could put a Model 2 together for? I'm not going to hold you to it. I'm just guessing. We could easily see what you can make per car and then multiply out how many cars you think they'll sell of it each year, and you can get earnings on it.
I think this next model has to be somewhere. I agree. It's going to be in the 17.5 to 18.5K range, maybe 19K tops, but I think 17.5 or 17 is probably their target, and they'll sell it for 25K and they'll make a lot of money. So I at huge volumes. So, and then remember, you have the incentive structures that are all still, you know, in place and somewhat ramping up globally. So those will still be there as well.
I just one critical issue with the next gen vehicle is if it's using lithium iron phosphate batteries, and they're not made in the US, it may not qualify. It probably will not qualify for the tax credit. And I don't think it's planned to be 4680, and I don't think 4680 production will be high enough to support the next gen vehicle. So the US version of the vehicle may not get the tax credit unless Tesla's going to build, or somebody's going to build a lithium iron phosphate.
There are three lithium
factory here.
There are 3 lithium iron phosphate factories in build right now in the United States.
Right, but they're probably not going to be producing in volume until 2025 at the earliest.
I don't agree with that. They've been in build since I think April and June. So I disagree with you. So our experience with the Chinese producers, they get into production pretty darn quickly. The other thing is that the rate of ramp of the 4680, they could well put in production lines for lithium iron phosphate of the 4680. We're just stuck in last year's or this year's story about, you know, the slow ramp. But I mean, they're in the vertical climb of the S curve right now on that. I think we're all living in last year's news. I think the battery situation is about to turn.
Can you tell us more about these lithium iron phosphate factories? I haven't heard this before. Where are these? Who's making them where?
Kat?
I actually, excuse me, just a second, Larry. I actually posted something. I'll repost it because it shows all the locations and at what stage they are. I'm going to repost that now.
Okay.
I think I would love to get the panels, everyone, I don't know, response on this. We see, especially in the United States, North America, we see legacy auto pulling away from electric vehicles, right? And I know Gary in the past has talked about EV adoption as a whole, and then Tesla will get a piece of that. I'm not saying that's a right or a wrong way to look at it. I'm just saying if legacy and other automotive choose to do hybrid and they pull away from BEV, battery electric vehicle, does that, I think that always would help Tesla, because then they would just go right through it and it's a superior product and people will just go to them and the competition's even less. Some people look at it the reverse, saying if EVs aren't adopted, you know, wholly by the manufacturing sector, that is going to lessen it, and then that's going to lessen Tesla's dominance as a stock or as a company. So I would love to get everyone's opinion. Is it good for Tesla if they're leading it and leading it almost by themselves, or do they need the entire industry to come along for the ride?
I don't think they need the industry. I mean, what it really comes down to is like, do you have the best product or not? And I think, I mean, if you look at Tesla's sales, right, if you put it versus everyone else's, even with everyone for the last 4 years saying, we're coming for you, Tesla, there's still, you know, the Tesla has more market share in the US than the rest of them combined. They're the best-selling EV, or one of the best-selling EVs in China, in the most competitive market. So I think it just really comes down to, do you have the best product or not? And so I think with the rest of them pulling back, and this is where I would love to get someone else's opinion, probably even Jeff in this case, because I know you're super close to this. I think what's going to end up happening is all the extra capacity these suppliers have built in based on those plans from the legacy EV manufacturers, I don't think they are going to be very happy about these pullbacks. And I think Tesla's going to come in and say, bro, we'll take it. We'll take whatever capacity you have. Let us grow with you. So if anything, it's going to give Tesla even better purchasing power, because now you're going to have a supplier base that was promised growth from the legacy automakers, that now they're pulling back, and Tesla's saying, we're still growing like mad. So can we tap into your supply base and help us drive our costs down even further? So if it's a net positive regardless. If legacy auto comes along, that means more people are shifting towards EVs. If they don't come along, Tesla has a huge cost advantage because the supplier base is still going to want to sell EV stuff, is my guess.
Yeah, what I would say is it's not always fungible, but basically a lot of the legacy EV suppliers, some of them, if they were different from Tesla, they're probably they're either going to die off, or they're not going to have the cost structure to be at the run rate that Tesla needs them to be at, if you think about. So Tesla's been bringing these suppliers along in Shanghai and around Fremont, and they've been bringing them up, and they've been turning them into basically from nothing into some of like the biggest suppliers now in the world. Some of these people you've never even heard of, some of their inbound suppliers. So Tesla's going to continue to bring them along, then ask them to build factories around their new mega plants is what I see happening. And then a lot of these legacy EV suppliers, first off, they're not going to believe legacy EV when they come back, and they're going to second guess their demand signals, and they should. And that's going to be a problem for legacy. Tesla is I agree with you. They're in this. They're going to be in an advanced kind of premium position from a COGS perspective. And as that tweet I said earlier in the week, every single platform that they release is greater, like significantly greater volumes than a prior platform that those suppliers are working on with them today. So if you think of S and X going to 3 and then 3 going to Y, everything's been a multiple going to the next platform. So suppliers see that. And if there's a sourcing strategy out there called 2+1, and I don't want to get too wonky on this, but basically Tesla is very multi-sourced in a lot of their attributes. Both think about inbound components, but also think about capital suppliers, think about service suppliers for the factories. And what this creates now is that every platform is much greater than the prior. In a 2+1 strategy, you have the 2 suppliers kind of fighting for share. And then you have this third that's a challenger that's kind of on the outside looking in, may have 0 share, may have very little share, and they're going to try to come in with unbelievable terms or unbelievable pricing to try to get to be a number 1 or 2. So that's the position that Tesla is in. And really, Ford or GM, quite frankly, while they have high volumes today, they're not in that position. They're in a position of suppliers actually losing money because they bet big, installed big capacity, and then it's not there. So they're 2 very different sides of the coin. And Tesla, I think I think they're going to have this COGS decline ability. Again, it depends what they do, but they're going to have the ability to do COGS declines that others can't do in the industry. Long answer.
Sorry to interrupt, because I just want to explain that I retweeted the long thread, and I also retweeted the partial post of that, which is the number 6 of that long tweet, which is the database called Charge the Book. So this was done by college students at Wellesley, and you can put in what you want. This is based on the IRA funding, so you will see battery plants that are already operating, the ones that are planned, the ones that are constructed when they're supposed, and you will find the name of the ones and the schedule when they're going online below. They're all named there. So this is by far the best source I've found on that, and I think that will satisfy Warren's curiosity on what's coming in terms of batteries. I'm always good at reading the mood, right?
Thank you.
Well, one thing about the Gen 3 vehicle in terms of batteries, of course, it needs less battery, but also the use case is different. I think also the segment is going to be less than the Model 3, and the Model 3 has less range than the Model S because it's market segment. And in Asia and Europe, the towns are more centralized in the sense of where they're located. So the way you use the vehicle is much different. Like in places like LA, you just drive like crazy long to go to one place, but that wouldn't be the case with a Gen 3 car. So you wouldn't need as much capacity from the very beginning, and you'd also have it for certain segments, and that's why they had initial illustration of the Model 2 from China like years ago.
Okay, well, we had a fantastic conversation. There was a lot of back and forth and just incredible information from the group. Thank you, everybody, for joining. Join us every week at 3 p.m. Pacific time. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.